So yeah, this myth that because I'm earning money through a trust or through a company or through a self-managed super fund, I'm doing the wrong thing. When arguably you're not. There's a reason that these corporate structures exist.
Hello and welcome to the Market Bull Podcast. Please note, topics and stocks discussed in this podcast are not financial or investment advice. Pasquale Princi is the managing partner of SEER Financial Group, which is focused on business restructuring, tax services, accounting and finance, and other helpful business and individual solutions. Now, Paz discussed his background and the niche skill set he has developed within tax services. He talked about some of the myths associated with tax in Australia, the current tax environment in Australia and globally, the importance of establishing financial structures, what investors could consider, and where the opportunities are emerging. A conversation highly valuable for any type of investor. Here is Pasquale Princi. So hello, I'm Ben Kostrich and this is the Market Bull Podcast. Joining me today on the show is a completely new segment or even topic that I haven't approached before, but it's Pasquale Princi, the Managing Director of SEER Financial Group. It's tax services, business solutions. It's a whole host of different, business utility and aspects that people should be looking to acquire and utilize. But yeah, welcome to the show, Paz.
Awesome. Thanks, Ben. And good morning to all the listeners on this fine Tuesday morning.
Yeah, when we originally first caught up, it would have been, a month ago. And we sort of had that conversation about, how like a segment like this could potentially be quite beneficial for listeners, given no matter what you're doing in life, stock market, investing in stocks, investing in properties, setting up your financials, tax, and solutions around how do you set up your structures is inherently very important. And it's one of those, we can do it now. They make tax interesting or fun, and people always have this, illusions around the subject. But for yourself going into this realm and almost specializing in this, and to the point where you are now as managing director at, again, a relatively young age, how did your whole journey begin and your interest in the tax world?
Yeah, it's an interesting journey I've been on. If I take it way back to, it was year 3, I actually weirdly made a decision that I wanted to be an accountant. At the time, my eldest cousin had recently finished school and had just commenced uni, studying as an accountant. So I went on my journey through school and was fortunate enough to get into uni in year 12. So I got selected for an accelerated accounting program. And then from then on, my journey just really took a new level. I was fortunate to work for one of the big 4 accounting firms at 17 through their undergraduate program. And then we continued the transition, moved to another fairly large accounting firm, and then my business partners established SEER Business Solutions, or SEER Financial Group actually, which was previously known as JBC Corporate. So when we started, again, weirdly, we didn't set out to be tax advisors or accountants. We were restructure specialists. So we were corporate advisors to businesses that were going through a bit of a turbulent time, as we called it, the boom to bust period. So we started in 2016 at the downturn of what was probably a very lucrative number of years in the mining and resource sector. And since then the firm has progressively grown. We've got just under 40 staff now, 2 practices, one in West Perth and Wangara. And as I said, I've always been given a number of different opportunities in life, and I was fortunate at a very young age to become a partner of the firm, and since then rapidly gone on another journey to reposition ourselves in the market and become what we would like to be known as a trusted advisor. So it's beyond just your accounting and tax needs, like you alluded to earlier. Typically, you always need a good doctor, a good lawyer, and arguably good accountant, good financial advisors. So we just play our part with some high net wealth clients, with some public listed clients, where we're more of a proactive tax advisor. And we were just having a chat about it earlier, that tax is really an outcome. So it's important that you do get on the front foot, that you do meet with all your advisors, and that you plan, because it's and it's a weird way to compare it. But once again, as we said earlier, it's, I've got cancer, I'll now go and see the doctor how to cure it. Or I've got a tax problem, I'll now go see my tax accountant how to fix it. You need to get on the front foot. You need to be putting in the right structures, and ultimately you better managing that outcome.
Yeah, well, I think being reactive is almost just a normal thing that a lot of people do, and almost like a disservice to a lot of us is that we wait until the last minute to actually think about, oh, we could have done something a bit earlier. And I
Mm.
think just from that discussion, seeing how you've pivoted and adjusted really the business model based on needs and being this holistic approach to be proactive with investors, or just again people or businesses or whatever group to help them structure their portfolios and whatever. I mean, going through this, I guess, transition and adjustment, I mean, what were you noticing was really driving this? And was it, again, just a massive gap in the market of not being serviced, or what was the driving forces
Yeah,
behind that?
yeah, it's a good question, Ben. So I think once again, I come from a small business background, so I definitely understand the ins and outs of running a real business. You know,
Mm,
dad's business has been around for 70 odd years. So one thing I noticed very early on is that the accountant played a very important role in dad's business. He both had an internal and external accountant. So what I recognized was, and as I continued my studying journey, was the tax system in Australia is consistently just bolt-ons. Let's put it
mm,
that way. So, the 36 Act came out, the 97 Act came out, and ever since then, there's just been a number of different adjustments and acts. Whereas, when you look at it, now in 23, and you have the benefit of hindsight looking back, you just go, what is this tax system and how
mm.
does it work? And even as a student at the moment studying my Master of Tax, I'm consistently questioning the lectures and just going,
How does it make sense?
Why does
Why?
this make sense and why is
Mm.
it so difficult? And I better be careful because I'll put myself out of a job. But, at the end of the day, the tax system is there to be utilized to ensure that you get the best benefit out of it.
Mm,
As long as you don't abuse it and you're not evading your taxes, it's there to be managed to the best benefit of the taxpayer.
mm.
Arguably, a lot of people don't do that, primarily because they weren't educated. And I've got a number of business clients that consistently come to me and just go, well, why was this never explained to me?
Mm,
No one ever told me that there's another tax for FBT, or there's this GST, and there's POYG, and there's
mm.
super and payroll tax, and there's state taxes, there's federal taxes. Like
There's a hell of a lot to
there,
sort of
there
keep
is
in your,
a
yeah, yeah.
correct. There is a lot of tax that you need to be able to understand. But equally, paying tax is not a bad thing.
Mm,
Paying tax, probably says that you're making money. It's
yeah.
just about paying too much tax,
Mm,
right? And that's why, people like us exist, is that we can come in, understand the operation of the business, understand the outcome that you're trying to achieve, and effectively apply the tax principles to what it is that you're wanting to achieve.
mm.
And there's a famous speech that it's not tax evasion, it's tax minimization. And I don't want to specifically say
Who it was.
who it was
Yeah,
and,
yeah.
and what it is, but it was a dressing down, as I would like to think, in
Mm,
a courtroom. So and like I said, that's why it's important you are proactive, and that's
mm,
why you meet with people like myself or other very competent tax advisors here in Australia and in WA as
mm.
well. Because we can really assist in the journey you're on, whether it be just a salary and wage earner to someone that's got 100 odd companies listing on the stock
Yeah.
exchange, et cetera,
Mm.
that we do play a pretty important role. So make sure you're on top of it.
And I think you said, well, at the outset, before we started, about every single person is different and unique in their circumstances, because everyone has their own, I guess, financial freedoms or goals. And because of that, it means really everyone has a unique case and a different, I guess, directional pathway to get there. It's just about understanding it. And I mean, when I first spoke with you, the tax season was, I guess, ramping up or in that sort of season. And now, I speak with so many people, either, my mates that are university students or even upwards of successful businessmen, and everyone I'm hearing is going, oh, I'm paying more tax. It's just this consistent, or I thought I'd get more back, but it turns out I'm paying more. And there's this real, just with everything else piling up on people are almost more like, well, how am I still having to pay more tax? Arguably, like, it's tougher on a lot of people. And I think that's really, I guess, put this to the forefront of my mind, is that there's really this necessity now to consider this as a genuine, it's always been a genuine, but almost like a more prevalent issue to really address. So when you're, I guess, having clients come to you, and there's going to be always misconceptions with tax and just sorting out your finances. I mean, when you first have a discussion with a client, what are they really airing as their concerns, or even do they not even have any? They're just like, how do I stop paying? Well, not stop paying, but reduce my
Reduce the
outgoings,
tax
because
burden.
it's just, it's hurting a lot of people in so many more assets. But it's like, yeah, that's like a growing cry of help almost in a way.
Yeah, you're right. So I think firstly, people don't understand that earning income not in your personal name is an option.
Mm,
Okay, so there's this myth that I need to generate all this wealth in my personal name, earning a salary and wage, because if I don't, then I'm just doing the wrong thing.
It's just the way it's always been in a way.
Correct. It's the way it's always been. I have, a house. I've got an investment property. I've got, a whole host of different shares, et cetera, but it's all in my personal name.
Mm,
Mm. So yeah, this myth that because I'm earning money through a trust or through a company or through a self-managed super fund, I'm doing the wrong thing. When arguably you're not. That there's a reason that these corporate structures exist, and there's a reason that a base company tax rate is 25%, and there's a reason that a self-managed super fund rate is at 15%. So what you need to do is you need to understand, like I said, that the end goal that you're trying to achieve, understand the benefits of using structure, and then ultimately the tax is the outcome of those structures. So, we're not licensed to provide, advice for establishing super funds and managing those funds. That's why financial advisors exist. But, arguably when you work hand in hand with those advisors, you can start to see that you can pay a more modest amount of tax per se through the use of such structures, and that's the role we play. So a big part of what we do is educating clients. First step is education.
Yeah.
So allowing them to understand what their options are, and then effectively working with them on an annual basis as to better manage the outcome, because life these days just changes at a rapid rate. So it's important that you've got structures that allow you to move, and you work with competent advisors that understand how the system works. So the myth, to answer your question, the myth is I need to have all this money in my personal name and have all these assets held in my personal name, when in fact, arguably for asset protection and tax minimization, you should have a number of different structures.
And there's almost this illusion that you have to be within a certain bracket to even approach this tax help. In a way, it's like, I'm not earning enough, so I shouldn't even consider it. Whereas I can imagine that's what you said before. It varies from, really high-end business individuals or family funds to just your everyday worker that's just trying to get ahead, because at the end of the day, at any stage of that, you can really help people get their financial freedom. But I mean, the myths and misconceptions within the tax arena, I mean, you must be constantly bombarded with, this is what I've been said, and that's clearly what it is. And this is my, I could say, almost interest is what do you usually get approached with, or what are some of those questions you quickly dispel, as a like you just said before, about having assets or money coming through, not just your own name, but others. I mean, what are some of the other myths or, accusations that people would say about tax that is apparently not the case? If there's a few top three potentially.
Top three. Once again, it's quite a,
because everyone's different as well.
Correct. That's what I mean. It's quite a difficult question to answer. I think a very big misconception is I can't touch my super until I retire. Now, again, I'm not going to sit here and provide superannuation advice as to what it is you can and can't do, but having a self-managed super fund is a very real option. And arguably, yes, you cannot access the money in terms of pulling the money out. However, your super fund can do a number of different things, such as investing for the benefit of your retirement. So when you look at the SEER Act, there's a very specific, legislative reference as to what it can do and what it can't do. However, one of the things it definitely can do is accumulate wealth for the benefit of your retirement. So if you are working with competent advisors, that's a real strategy to consider. And I think you said earlier, why? Well, again, the super fund tax rate is 15%. And if and when you go into retirement, and it could be 0%.
Mm.
So it's important that you're progressively working towards a common end goal. And you go, well, I'm only, mid-30s. Well, why would
Why
I
am I
do
even
that?
considering it?
Yeah. Well, mid-30s, say you're a FIFO worker, earning in excess of $180,000 a year, which is about the average wage. You're in that top income bracket. We're talking 45 cents in the dollar. You'd be paying between $40,000 to $60,000 a year in tax. And you go, well, what can I do? Well, that'd be an option to consider. But I can't touch it. Well, at some point you will retire, and you want to ensure that you've got things nested away for that point. So, yeah, misconception there is, I can't do anything. You can, and it is important that you do sit with your advisor. Like I said, super funds is one of those things we don't necessarily sit here and advise on, but from a tax perspective, there are very large opportunities. The other one is I'm going to do all this investing in my personal name, and I'm going to pay all this tax. Again, there is structures such as establishing a trust that you have the benefit of distributing to beneficiaries on an annual basis. Why would you do that? Well, again, because there are options to minimize the amount of tax you pay. Legally, of course, there's a recent, it was a legislative reference has been around for a long time, but it's Section 100A, and everyone's going, oh, this Section 100A, this is a big problem, I'm doing all the wrong things. No, you just need to understand that you need to work within the constraints of the law, but arguably still use it to minimize your tax. So establishing a trust, running investments, through your trust, and having the ability, even in some instances, to obtain small business concessional discount treatment. So a number of concessions are available, and arguably, if you've got the right advice and you structure it, you could pay a very small amount of tax for a very large capital event. So, there's a general discount which everyone knows about. I can save 50% if I hold my shares for longer than 12 months. But there's another discount, or there's a whole host of different discounts that continue to exist. There's an active asset discount. You get another 50%. There's a retirement, opportunity or concessional contribution or non-concessional contribution that exists where you can contribute part of that gain into a super fund. And then the last, or that there's another one as well that says if you then pick up the balance of those funds and reinvest it into another active asset within a time frame, you can effectively roll that gain forward. So there's and obviously there's an eligibility criteria that needs to be met, but such treatment does exist. And the last one that I did miss, and in argument it could be the most important, is if you hold the asset for longer than 15 years, you don't pay any tax at all. So there, again, everyone's situation is different. You may think that you can't do anything, but establishing companies and trusts and arguably super funds are there for a reason. You're not evading tax. All you're doing is you're minimizing it, parking investments in different vehicles, and arguably de-risking yourself as well. So, if it all was to go bang, as we would say, you may not lose everything because these structures exist. They're silo structures. You've got competent advisors that actually understand what they are and how they work, and you proactively work with your clients, as I said, on an annual basis to ensure that you are making the right decisions, because financial decisions that you make, tax is an outcome of those. So it's important that you manage your tax.
And I mean, it's very important because even when I think back to almost my schooling education into university, there was a little bit of this touched on, but really, and a lot of people understand it, you almost learn all this outside the education pillars in almost a really upsetting sense. Like, this is the real world applications of consequences and actions that actually impact your financial freedoms in your life. But for some reason, it's almost, not neglected, but not covered as much as you'd think is a priority for people. And this is one of the points about, given your position, you've got your niche and you're specialized in it. There's way too many facets of arguably running a business that you have to be across. And this is where you need this sort of expertise. And reliance on someone that actually knows what they're doing, because I can imagine throughout your time said that the legislation boundaries or just, I guess, guidelines have probably exponentially increased even over the past few years. And you'd say the rules or the structures around them appear to change. People don't have all the time. But throughout your time, have you seen, again, quite a vast amount of changes? Or as you said, it's all been set there for 40 or 50 years since the days of and it's just about people not having a full, also really the patience to go through it all, because it'd be quite a dry read for some that aren't overly as enthusiastic about this side of the world as well.
I think there definitely has been a shift more recently as the reporting. I'd like to think the reporting regimes of the tax office have increased. So there's a lot of data that is now being passed through the banks and through your financial brokers, etc., directly to the ATO that you probably don't even know about. So I think from that standpoint, there's been a big shift now to get in with competent advisors to have appropriate structures. Also, there's a I believe a misconception that trusts don't work for you, and because, as I said, if you've got a business, you'd probably be aware of this Section 100A issue, and everyone's going, "Oh, we've got to move away from trusts. They're bad." No, they're not, and that piece of legislation has been there for a significant period of time. The ATO, without directing this comment at them, is preferring everybody to transition to companies. However, whilst I do believe that may sensibly be the right move for the future, the tax system has not been amended to reflect that. So I think if there's more concessional treatment from the ATO in terms of transitioning into a company-like structure, it'll probably be accommodated by clients and taxpayers. But again, it's all about understanding your situation, understanding what works for you and what doesn't work for you, and ensuring that you actually have an average rate of tax that is probably fair. Because at the end of the day, arguably everyone says, I always pay too much tax.
Yes.
And I think it depends on what situation you're in. Yes, if you are earning $200,000 a year, you're going to pay tax. But if you're earning $40,000 a year, you may not pay as much tax. But as a percentage, again, what's your average tax rate across your group? Is your wife working? Is she not working? Is there an opportunity that she might look to do investments as opposed to yourself?
Yeah.
There's a whole host of different things that exist. But back to your question about what I've noticed. I've just noticed that it is getting more difficult to tax plan because a lot of the opportunities are being, I guess, removed. COVID was a pretty turbulent period. But from a tax perspective, I think it was one of the greatest periods of tax. I wouldn't even call it a reform because unfortunately they didn't reform it indefinitely, but one of the most tax advantageous periods whereby, the small businesses were getting immediate asset write-offs to go out and buy new gear, new plant and equipment. So, I thought that was a fantastic move by the tax office to really get the boost into the economy that it needed. And a lot of our clients took advantage of that. So post-COVID, they just remove it.
Yeah.
And they go, okay, we're going to revert back to the norm. Which again, I don't think is the right move. And unfortunately, not getting into politics again, but every political party only has its 2 or 4 year period that it'll get in. It'll make a move for that period and then it'll roll out. So I think we need to be working at least at the top end or the front end, either with the ATO or political parties, to ensure that tax reform continues to occur. And I think it's important that the tax system starts to reflect some form of indexation, where as inflation goes up, so does the opportunities from a tax perspective to minimise, or arguably, we're getting pushed towards all becoming salary and wage earners, in my opinion. Okay, so there is some sizable tax reform that will be coming in. I think it's in 25 or 26, whereby they're removing one of the brackets and they're trying to bring this flat tax rate in. Everyone goes, amazing, we're all going to pay this 30 cents in the dollar tax, the world's going to be a greater place, etc. What everyone's forgetting is by the time we get to that point, our incomes are going to be far exceeding that bracket, just because of the way the economy is and the moving scale, right? And you'd go, why would we putting in tax reforms that ultimately we're not going to be able to benefit from? And they say, we're going to address the large part of the Australian working public by that point. I think I could almost disagree. Now, it'd be interesting to see what happens between now and then. I don't have a crystal
When is that
ball.
meant to be sort of?
So I think it's 25, 26.
Yeah, gotcha. Okay.
Off the top of my head, where we're effectively looking to expand the bracket. It could be $40,000 to $200,000. Once again, I'd have to go back and check. It's not at the forefront of my mind.
But again, that's the idea, that it could potentially change even before then.
Correct, and that's why I'm not really focusing on it, because as usual between now and then, there's so many moving parts that'll exist. But the normal Australian, in my opinion, a big part of the workforce is going to be not pushed into, but is getting to a point where you need to be earning a salary and wage. You can't go to the bank as a business owner these days without producing pay slips. And you go, but I'm a sole owner of my business. My business earns X, Y, and Z, and the bank turns around and says, well, we still need your pay slip. But I don't pay myself a lot of money because I'm keeping it in my business, right? Well, not really acceptable. And you just go, so not only is there issues with the tax system, but there's an issue with the broader economic system, where trying to explain to a bank these days that you've got multiple structures and your assets are held in different, they see it as, that's a bad thing. It's too complicated. Everything needs to be in your personal name. And you go, at what point do people start to see beyond these issues? We as as an economy, we need to broaden our thinking, and we need to align ourselves more with a global view, where having companies and trusts isn't a bad thing.
And is that an interesting point there about, in your position, mostly noticing what's happening in Australia, but of course seeing what other countries and jurisdictions are doing for, their tax systems? And is that, again, feeding into being like, well, if they do it, why can't we? Or just noticing what switches and changes are happening? Or?
Correct, yeah. So fortunately enough, as I typically do, I continue to study, and over the course of the long weekend, I'm studying international tax. And I think it was in 2015 at one of the summits, a lot of the countries got together, and they actually estimated that between 100 and $240 billion of loss of taxes in revenues was occurring. So what they did is said, all right, let's put our resources together. Let's start to develop more of a global view on tax in order to, minimize how much we're missing out on. So I think what that's shown me is that the multinational enterprises that, turning over $1 billion plus are really using the system to their benefit. The average Joe here in Australia, where you go, well,
how does it apply to me?
How does it apply to me? Well, our tax system, I think, is just a very outdated, maybe is the right word, or a very, very reactive system to the rest of the world. So there's a reason that, people have different companies in different jurisdictions that do different things. And once again, assuming it's all within the letter of the law, it's completely legal to do so. Yeah. So, you need to broaden your horizon. And as I said, as an Australian tax system, we're reactive. So it's always interesting to see what the rest of the world is doing, through Europe, Singapore, et cetera, and to see how the Australian tax system will evolve.
Yeah, because I even looked at some of the new assets that have been online, the ATO trying to keep up with cryptocurrencies, for example, and that introduction, you just sort of instantly got the idea that the ATO was really venturing into a path that they had no idea of what to do with that asset coming online. And I'm not pronouncing that I'm a crypto expert, but that has already put a massive precedent on the ATO to suddenly focus and put a lot of effort into trying to figure out, how are we going to, again, tax it? And that's a bigger part of, people have got this, misconception that, you're avoiding. And there's almost this, say with Australians, that tall poppy syndrome. If you're trying to do something to potentially get ahead, you have to be cut down. That's just not how we do things here. And you can see that there's definitely people that are looking to do whatever they can to not only help themselves but their family going on, because it's definitely been a tougher period of time. And I always hear from a lot of people being like, "Oh, our generation is stuffed." And I'm like, well, I wouldn't say that. I think it's just about, again, making sure that you've got the right lenses on to see, because there's always opportunities, and it's almost been this historical. Everyone always complains about either the housing market or the cost of living, and I'm not denying that there are those pressures on at the moment, but there's always these, case scenarios all throughout history. It's just about figuring out, what lens you're going to look through the opportunities. But from looking at the asset point of view, from tax, and I understand it's probably very difficult to get across quite quickly, but when you're looking at, again, we were saying, your stocks, and you're investing either for your retirement or for your own personal, CommSec or CommBank account, or if you've got your property either to live in, or it's an apartment, or if it's, again, some sort of commercial property, like you're buying for a shop, or if we go to, again, digital assets, cryptos, and again, I'm not even highlighting all of them, but given that you're experiencing quite a lot of interest from all these different people with ideas of how they want to protect themselves, really in a better sense. If you're looking through that full suite of assets, do you see a particular person nowadays diversifying across all of them, or is it, again, very niche and specific, saying that, I'm just almost all in on stocks? And that's, again, the idea of, do people still diversify across different asset classes, or are they just going, I'm in stocks, but I diversified across different sectors? What are you really, seeing change or adapt, or just your experience so far?
Yeah, I think to answer your question quite directly, what I'm seeing is that the average consumer has access to a far greater resource, being through the internet, and you'll often find that they do a lot of research prior to getting to seeing me. So a lot of them do look at the shares and run a lot of their own CommSec accounts, because it's easy to. Arguably, and I'm sure some of the other guys on the podcast could testament to this, but I think it's a lot easier to trade shares now than it's ever been.
Yes.
Not only through the Australian Stock Exchange, but even through
Globally.
the global. The other avenue, I think, from assets is people have this belief that all my asset, or a big part of my asset class, should be my home. Again, I think our generation is moving away from that. I think our generation is moving to more a rent lifestyle, whereby we won't park all of our funds into buying that one main house, that brick and mortar life. I think we're going, I'd rather rent at a lot of different places to get an exposure to living in different lifestyles and use my money to invest. I think that's a big shift. And I think that's where a lot of the asset, or I guess investment decisions are coming from, is that, why do I need a house? I'm still relatively young, our generation, as we say, I don't really need a house. I actually want to live in the city for a bit. I want to move in the outer city for a bit. I want to live close to work. I want to,
or even interstate as well,
interstate.
And all the other opportunities around the place.
So, crypto, to answer your question, again, everyone's always dabbled in a bit of crypto.
Yeah.
I think a lot of people still don't understand it. I was reading something a couple of weeks back that, the NFT market has just plummeted. And to a point that it almost doesn't even exist anymore. So, and a lot of the advisors that I speak to, they don't even touch it. So, if we're talking people that are providing that investment advice don't want a bar of it, that probably says something. So, will crypto continue? Maybe. We've got some clients that are in that space, and they've done exceptionally well. But again, it was all their own research. They didn't go to any specialist and speak to crypto specialists per se. It was a couple of young guys got together, spent weekends and at nights investing, or more so researching into their investments, and their investments paid off. So, and I think to the last bit, business owners are coming to realize that paying rent is not a feasible option. So I've got, once again, a fair few clients that are now gone through a bit of a good period, I think, for the most part. A lot of businesses over the last 2 or 3 years, once we got over that COVID hump, everyone's come out on the back end, but a lot of them have started to realize that, wow, I probably should have made a better investment decision, because if and when something like this happens again, I don't want to be tied up to a 5-year lease, et cetera, et cetera.
Yeah.
At least if it's my own property and I'm dealing with the bank, you might have a half a better chance dealing with the bank than dealing with a landlord that probably doesn't want to deal with you. So, yeah, commercial property, I think, will begin to come back, and it'll be, almost vertically integrated to these businesses that you're owning your own commercial property where your business operates in a separate investment vehicle, I'd like to hope.
Yeah.
So not in the same company that your business is running out of. But yeah, I think those are the asset classes, those are the movements I'm seeing. Is it tax orientated? I don't think so. I think, again, tax is an outcome. However, it is important that when you are reviewing your portfolio of investments, you are meeting, with your advisor, and one of those being your tax accountant.
Yeah, I think it's constantly shifting and changing, and I think people's mindsets. I'm a big fan of traveling, and whenever I go to a different city or different country, you just see so many differences in the way that people live. And I look to Europe with, almost everyone there rents. No one owns their own house, and it's an apartment. And in the idea that the kitchen is completely, rent almost is included in that. You have to bring everything into your own kitchen, but there's almost this, I guess, we get stuck in these little bubbles whereby, much as we have access to the internet, you've almost got to go out and see what the other world and the other countries are doing, or other cities, to get an understanding of, hey, maybe I want to try that. It's not just following what my dad and his dad did and always continuing that same trajectory, because these days there are so many different options. And I think, you hear everyone talking about, housing crisis and again, I'm not denying that that's not a thing, but there's just so many other little niches or opportunities that people can start looking at. And it's just about, again, having a different lens on, or again, advice and people helping you. But I think there's almost this, I'd like to say, a rise in people looking to do this. But I mean, that would depend on how busy you guys have been as well.
Yeah.
Just to see if this is actually a growing market.
I think you're right. I think what I'm seeing is a lot of people are now open to the idea of a side hustle, right? So I think we are quite time poor. However, we have a lot of resources that we can use to our benefit. So, yeah, to your point, I think the side hustle idea is coming back. The days are gone of, I got one job, I worked there for 40 years, I work my bloody ass off, and when I get home, I'm just so tired. I feel people are all about this work-life balance, right? However, they will spend less time at work and more time of their life investing in a little hustle.
Yeah.
So to them, they see that as a better work-life balance, because when they're at work, they've effectively got something else that's working in the background, drop shipping or investing or whatever it is. But a lot of people, I am finding, are more open to the idea of a side hustle. So earning income that, doing something you like to do, obviously, because a side hustle, you genuinely do have to have an interest in doing it.
Yeah.
Otherwise, you just work harder at work. But yeah, that's coming back as well. Yeah. So again, I saw that when I was doing a bit of travel myself, that I'd meet with a lot of, guys in business, and that's how I'm doing this. However, I'm also doing that, and that. And you go, so what made you get into that? I just thought it was something interesting. Excited about it. I'm passionate about it. So I got into it. Myself, I've got, 2 or 3 little side hustles as well. And they really are side hustles. We're not talking big businesses, but it just keeps the brain moving. And I think it allows you to get a different perspective in a whole range of different industries. And as an accountant, I feel a big part of my job is to advise to a number of different clients and businesses and people, and I have to have somewhat of a broad spectrum, and that's why I myself will go on and do crazy things. Like I'm looking at something in China at the moment, so I came up with this idea, jumped on a plane, went to China. I'm looking to bring it back, and it's just like, well, why are you going to China? There's all this negative press that we're all moving away from China, et cetera, et cetera. Well, the Chinese economy is still, globally one of the largest,
still massive,
and there's a reason that they exist, and that there's a reason that the Australian economy and the product and service we have over here is 10 to 20 years behind them.
Yeah.
So get on the front foot, jump on a plane, go and find that hustle that you're ultimately passionate about, bring it back and make something of it. So I openly encourage my clients when they say, "Oh, well, what can I do?" I said, "Mate, find a side hustle.
Yeah.
Get, if you're eager to earn more money and you want to do things,
Yeah.
pick something up. Let's workshop it. I can assist you beyond the accounting and tax. Always about having a good network of people that you can rely on. Put them in touch and see where you get to."
Yeah. No, I credit that as well. There's a lot of people that you'd say it's a side hustle, but really it's a side passion, because
Yes.
at the end of the day, you can really do well for yourself by following your passion, and the money will follow that depending on how,
It's an outcome.
yeah, exactly. And it's just like a natural thing from either sport coaching to, podcasting to setting up other businesses. A business can be almost in any sphere. And I know we've covered a fair bit, but I guess in the tax bracket component of things, it's really just been like a slither of information. You mentioned at the front, the key of all of this is educating and having a better understanding. And I can imagine there'll be listeners and viewers that are probably have just got like a little tease really of all the aspects of what they can potentially accomplish or can start considering. I mean, where can listeners and viewers go to really, I guess, attack this information, or even reach out to yourself and get some more advice and some help?
Yeah, it's a good question. So I think typically the ATO website is actually quite a good starting. So, and the reason I say that is the ATO has a pretty clear position on how they view things, because at the end of the day, the ATO's position is in effect the way they interpret the legislation. The way a normal person or a sophisticated person may interpret it is different. But to that point, start at the ATO website is always a good starting point, because, like I said, the content on there is quite useful. And then arguably you pick up the phone and you can, give us a call.
Yeah.
However, people go, "Oh, do you use ChatGPT?" No, you don't, because unless you have the right prompt and you actually understand the question that you're asking, you don't go to sources like that.
Yeah.
So first and foremost, ATO is a good starting point. There's always a lot of publications that get made available, tax journals and articles, etc. People probably perceive tax as such a dry topic. I'll just pick up the phone and speak to your accountant. Probably a good way to start. Pick up the phone and ask the question. Tax is actually quite interesting, and I'm going to say that with a disclaimer.
But that was the point of this, was to try and again bring out that fun and excitement and make a topic that you'd say traditionally is a bit dry and boring, but you can just see there's so many aspects of it.
Yeah, and like I said, it's interesting when you get into it, and it's interesting to apply it to your situation. So just because you're the normal Joe, there is options, and whether you've got good financial advisors, typically they're backed up by good tax advisors. So yeah, you can pick up the phone and speak to us as well. Obviously, that's what we're here for. But yeah, ATO, great starting point, and then work towards meeting with your advisor, because again, I'm in professional services, right? And I appreciate that advice. It takes a number of years to get to a point to be able to provide, this level of advice. And I'm still very early on in my career, but I've got a backbone of business partners that have been around significantly longer than I am. So picking up the phone and speaking to us, and as we would say, a whiteboard session or just a quick chat over the phone, what I could provide in a number of minutes will save you hours, if not days, or you probably don't even know that it existed. So getting a competent tax advisor, I think, is a critical piece as well.
Yeah. And I can see that, again, setting up these structures and having these conversations, it's not stuff that just happens overnight. And I think there's a big direction of people that like to either invest in something and make a quick return or whatever. But I think you have to go with the mindset. This stuff is not something that's going to suddenly make effect 2-3 days or even a few weeks. This is setting it up for 10, 20, 30 years. And I think the more people can start thinking into their future and what their future looks like, instead of it's very easy to focus on the present, that's where a lot of these services and opportunities arise, because that's really what you need to start thinking about. But you really have to take a step out of the present and go, what does the future look like? And
correct.
I know you've got a lot of services. I'm sure you've got a website and social media, but for people that want to, I guess, reach out to yourself in particular and have a chat with you, where can they go?
Yeah, so we've got a decent online presence thanks to Andrea, the queen of marketing here. But yeah, we've got a website, so www.seerfg.au, no .com, because we've got one of those cool new domains these
very
days.
nice, very nice.
But yeah, you can pick up the phone and obviously give the office a call. You can ask to speak to myself direct. Alternatively, there's a whole host of different
team,
advisors.
40 people.
Yeah. So
It's
we've
a big
got a
team.
good squad
Yeah.
here. But yeah, please just, and there's even contact us boxes if you don't want to speak to someone, you just want to type the question instead. But look, we're approachable, so we're always open to meeting with new people, and have I'd like to think we've got the capability and expertise to then execute. So yeah, either the website, on our social media, Instagram, Facebook, or just pick up the phone and give us a call on Google's the 63237000. Nice and easy. But yeah, happy to chat with any of the listeners, and just provide an insight. And like I said, a big part of what we do is building that trusted advisor status, and more importantly, educating our clients so that they can go away and, I guess, look at things with a different lens that they probably didn't know existed. There's nothing worse than having to call your accountant every 3 seconds and then expecting a bill from them. That's not the way we operate. I'd like to think that we grow with our clients and we see the bigger picture too.
No, good. And I think, as I said, when I first reached out to yourself and your group, was about this is potentially an ongoing educational journey. And I hope listeners have taken a lot away from it. And I think, as we said, this is just the beginning of the road of tax and setting up your structures. But I do appreciate your speaking on the show today, Paz, and I'm looking forward to hopefully seeing what the feedback is and making this a regular component, and really diving into the specifics and the niches and certain areas that people can really start thinking about. So thank you for speaking on the show today.
No, thanks for having us, Ben, and it's a pleasure to see you go on your little journey as well, mate. I think you've got a bright future ahead, and you just stick to your pathway, and one day hopefully you'll be taking over Spotify, or next Joe Rogan podcast or something.
Go big. That's what we're all hoping. But yeah, that was fantastic.
That's it. Thanks for having me, and thanks for the listeners, and I hope they found it insightful.
Thanks for listening to the Market Bull podcast. If you enjoyed it, please make sure to like and subscribe. You can follow the Market Bull on our socials at Twitter and LinkedIn by searching The Market Bull. You can also subscribe to our newsletter on the website by visiting www.themarketbull.com.au.